Hi everyone, my name is Ola Sulaiman. So in this video, I'd like to continue from where I stopped last week about capital allowance, how to claim capital allowance. But this video, I'll be talking about the rates. And I think the easiest way for me to explain this is by using different percentages to explain the different allowances at the different rates. So I'll start from 0%. 0% simply means you can't claim capital allowance on that plant and machinery that you're using for your business. An example of that is buildings or walls or floors in the building. You can't claim capital allowance. Now, then I go to 8%. 8% rates are usually used for special rate pooled plant and machineries. A very good examples of this are integral parts of your building like air condition, lifts, etc. Also some high emission car as well. The meaning of that is just 8% you can claim back as an allowance every year until it is drawn down. Then I'll go to 18%. 18% are plant and machinery that are kept in a general pool. It's also referred to as written down allowance. And this is just basically plant and machinery that do not qualify for annual investment allowance for any tax reason. So therefore 18% would have to apply that. And usually cars, because cars you can never claim annual investment allowance on cars. So usually is the 18% are used for some of the cars and also for some other plant and machinery that you can claim EIA from. The meaning of that is every year you claim 18% until the whole amount have been claimed as capital allowance. And then I'll jump into 100%. Now 100%, we have two main allowance on that 100%. First one is the annual investment allowance. And the second one is the first year allowance. The first year allowance, I'll start with that one. First year allowance are used for any plant and machinery that is environmental friendly or beneficial to technology. Even some cars with low emission, less than 50 as well, you can actually claim 100% of what you've spent on this particular item. Then I go to AIA, which is annual investment allowance. This is for any plant and machinery that's used in the business, except for cars that for any tax reason can qualify for AIA. Now, as our last year used to be 200,000 that you can claim, but there's been a temporary increase of up to £1 million. That means you can actually invest in plant and machinery in your business that qualify for AIA of up to £1 million, and then you can claim this and as an expense. Now, when you say temporary, it means they will take it off at some point. So this is the best time for you to invest in your business. Now, that's not the issue. Now, the main one is for special rate pool that you're supposed to claim 8%, you're actually allowed to bring some of those assets that are supposed to be on the special rate pool and claim AIA on them. So definitely, if you're an iBuyer, you're investing in loads of things, first of all, claim the special rate allowance pool, special rate pooled items first at the 100%. And then if they're still left over, you can leave them in the general pool. In my next video, I'll be talking about cars, because this is a very complicated part of capital allowance as well. I hope this video helps. My name is Ola Sulaiman.